All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Inner Circle Live pre-New York session. I'm your host, Ryan Carthage. I'll be joined shortly by my awesome partner, Mr. Benny Allen. Hope everybody's doing well today. As always, let's turn off all distractions, grab a pen and paper, let's take lots of notes. Let's make sure that we participate and engage. And as always, I want to start our day off by taking massive action. That action stands for accepting all possible losses before entering a trade, preparing you for any outcome, setting yourself, body, mind, and spirit, ensuring a balanced approach to trading, trusting your education, strategy, trade skills, and intuition. Imagine your trade successfully materializing, obeying your trading strategy, avoiding decisions based on greed or fear, and never looking back or stopping once your trade has commenced. All right. So if everybody can hear me okay, drop me one in the chat and we will get things underway. Appreciate it. All right. And let's get to it. So, they were able to get Donald Trump's big, beautiful bill um, passed through its first stage on Sunday. And so that has now gone to the the Senate for approval. They're still working on some negotiations in the meantime to get things in a better space. So still some negotiations happening around that, and that ultimately the tax cuts that are proposed across the board. So that is still in negotiation. Um, so we'll see where that goes as we continue to move through the week. They do want to have that finalized. Their goal is to have that finalized by um, June 4th, if I'm not mistaken, is kind of their goal. We'll see if they get there or not. Still quite a few points that they are working to negotiate. So that's where that is. Main front on trading economics, we got China lowering their lending rates for the first time since October. The People's Bank of China cut key lending rates to record lows at their May fixing, in line with the market expectations and marking the first reduction since October. The move follows Beijing's sweeping monetary easing measures announced early in the month to bolster the sluggish economy and cushion potential fallout from the ongoing trade tensions in the U.S. The one-year loan prime rate, the benchmark most corporate and household loans, was lowered by 10 basis points to 3% even, while the 5-year LPR loan prime rate, which guides mortgage rates, was cut by the same margin to 3.5. All right, so that's where they are. Continue to work to boost the economy. Uh, continue to boost the economy and uh, take measures to brace for any fallout from the trade tensions and whatever this negotiation period turns out to be. Okay. All right. Give me 1 second, everybody. Okay, so that's where we are there. To the dollar. The dollar index fell to 100 even on Tuesday, marking a near 2-week low and extending a 0.7% decline from its previous session as renewed concerns over the U.S. economic and fiscal outlook weigh on the sentiment. All right. Traders also remained focused on potential developments in the global trade negotiations. Over the weekend, Treasury Secretary Scott Bassett reaffirmed that President Trump intends to impose tariffs at the rates threatened last month um, on trade partners that fail to engage in good faith negotiations. Right. This is the term here that caught my eye. Right. What does that mean? So we'll see where that takes us. Adding to the fiscal anxiety, Moody's downgraded the U.S. rating from AAA score to a AA1 on Friday, citing uh, rising government debt levels and a widening budget deficit. Right, concerns whether were further fueled by the approval of Trump's tax cut proposal, which includes new tax cuts without offsetting the spending reductions. Right. So ultimately, it's going to add to the deficit and add to the deficit substantially. Meanwhile, U.S. Fed President John Williams and Atlanta Fed President Raphael Bostic, generally always ahead of the curve, indicated that policymakers may not be ready to consider rate cuts before September. All right. Um, so, couple points here, and I got you, Joy. Um, let's talk this downgrade, right? We understand the trade and tariff situation, right? We'll watch the good faith negotiations and who goes on that line. We'll see what happens with China in that conversation as well. But there's Moody's downgrade. What does that mean? Um, it's a long-term credit score for the United States, right? Um, and this is the first time in over a century that the U.S. no longer holds a top tier rating from a major credit agency. And this follows the earlier downgrades by Standard and Poor's in 2011 and the Fitch ratings in 2023. But reasons behind this, right? Rising national debt, persistent increases in government debt, and interest payment ratios have reached levels significantly higher than those uh, of similarly rated countries. All right. So they're basically their debt to GDP is way off balance, right? Um, and then you have the fiscal deficit. The US has experienced a large annual fiscal deficit without effective measures to reverse that trend. Okay, so they continue to go more and more and more in debt, and they haven't offset the spending with income. And the tax cuts add to less money coming in to offset the spending that's been happening for quite some time, right? Um, so they haven't reversed these measures of that deficit continuing to widen with other sources of income. Then you have political gridlock, right? A lack of consensus among successive administrations in Congress on fiscal reforms, and this has exacerbated the the fiscal challenges of the country, right? Because nobody agrees on what the plans are. So one thing will get implemented and then it gets all broken up and cut and pulled back, and something else is implemented. So there's no consistency in the plan from administration to administration. Okay. So what does this, how does this impact us, right? Increased borrowing costs is number one, right? The downgrade may lead to um, investors demanding higher interest rates on U.S. treasuries, all right, um, to compensate for the perceived increased risk, right? And so the generally those government notes are backed by the full faith and credit of the U.S. government, or that faith is kind of waning a little bit. Okay. the increased risk in potentially rising borrowing costs for the government. Then you have impact on consumer interest rates, right? Higher treasury yields can translate into increased interest rates from a consumer on products like mortgages, auto loans, and credit cards, right? The average interest rate for a 30-year fixed mortgage was 6.18 as of last week. Okay, so that could also be impacted. And then you have your market reactions, right? How the market takes this information and what they see or what they feel. Um, and so the initial market reaction included a rise in treasury yields. Major indices, they didn't really have a negative reaction to this yet, right? Your S&P fluctuated but closed slightly up by 0.1% on Monday. So we'll see how the market continues to take in the data and the information. But as of right now, the indices were not really impacted by the score. So um, that's kind of the overview of the the change in the credit score and what that means. Um, if you look at guys like Ray Dalio, which we talk about a lot, um, he expressed concerns that the downgrade might understate the risk associated with U.S. debt, particularly regarding uh, the potential for the government to ultimately print more money to meet their obligations, right? And when they get to the point where bills are due, they go to print more money because they don't have the money to do it because they haven't offset those that prior spending. And this could devalue the currency and then hurt bondholders even more. Okay. Um, so that's where we are. That's what that means um, as far as the credit rating goes for the United States. Any questions on that part? You're welcome. No. All right. Cool. Um, mm, mm, mm. Australia, they cut their cash rate. All right. Reserve Bank of Australia cut its cash rate by 25 basis points to 3.85 at its May meeting. First rate cut since January and in line with market expectations. Uh, the move brought borrowing costs to their lowest levels in 2 years. As headline and underlying inflation eased to the RBA's 2 to 3% target range. The board noted that inflation risks are now more balanced, um, though the outlook remains uncertain, especially due to volatility in the global trade policy. The overseas economic backdrop has deteriorated, partly due to higher U.S. tariffs, promoting the RBA to consider a severe downside scenario. Right? This rate cut could, in the future, cause a severe downside scenario. Right? So they're looking at that as a potential, depending on how things move forward when it comes to the trade scenario with the United States, right? It emphasizes readiness to respond decisively if global developments materially impact domestic activity or inflation. While Australia's GDP is still expected to pick up, it may do so more gradually amid a weaker external demand and slowing consumption. All right. The labor market remains tight and unemployment steady at 4.1. Okay. So they're going to closely monitor the data and the risks to guide their future decisions. So extremely data dependent there. Okay. So that's where we are from a fundamental perspective. We got a lot of speakers speaking at this Fed Listens event this week. So you got tons of individuals speaking, tons of questions. So those responses could potentially move the market if they are, um, depending on what's said. Um, and you'll see that sprinkled out throughout the week. This week, you got CPI for the Canadian dollar coming out today at 8:30. You got CPI for the pound coming out tomorrow at 2 a.m. Um, ba, 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 ba. And then you have on Thursday your PMI data from the Eurozone, and you got PMI data coming out of the UK, and you got unemployment rates for the dollar, and then you got your flash PMI for the dollar as well on Thursday, along with Governor Macklem speaking for the Bank of Canada. Then on Friday, you have core retail sales for Canada and more FOMC members coming to the microphone. Okay. So not a busy week from a data perspective, but you have a lot of folks speaking and giving their thoughts on the current state of the country, fiscal policy, trade, all of those things. So keep your eyes on those types of things, and that could move the market in a major way, depending on what's happening. You also got crude oil inventories coming tomorrow at 10:30. All right. Benny, good morning, bro.
Good morning, Ryan. Good morning, everybody. How are you, Ryan?
I'm doing all right, man. How are you?
Doing pretty good, man.
Good, good. Talk to me about what's on your mind, man.
Oh man, nothing. Just you covered everything. Great explanation. In regards to the credit rating and why it's important. Definitely appreciate that. Um,
Sure.
other than that, like you said, it's slow. Interested in seeing what some of these members have to say, but just continuing to watch. To see what happens with this tax bill. That's the main thing that's on my radar
Yeah.
is following that, which plays into, you know, what you said in regards to the credit rating. You know, how you gonna pay for all this stuff?
How you gonna pay for it all,
How you,
man?
how you gonna pay for all this stuff, man? You just gonna run the country into the ground. You know what I mean? The federal government not bringing in enough to pay off the debt. Like, so that's my main focus now, because that stuff is just around the corner. They're trying to get that stuff pushed through fast.
Yeah.
So I'm interested if any Republicans are going to be willing to stand in his way. So we'll see. That's all I've been that's been my main focus, and tracking these 80/20s, man. That's been my game plan. We'll see what's going to
Yes,
happen with
sir.
this tax bill, because the China situation, all that back and forth. It is what it is. Now at this point. And then watching to see what happens with this tax bill. Lot of back and forth going on right over the weekend regarding Walmart saying, hey, some of this cost is going to get passed on to the consumer with these
Yep.
tariffs, and the back and forth, some of the stuff he had to say on Truth Social and all of that. But that's the reality. Tariffs are a tax on the American people, so on the consumer. So it is what it is there. But hey, Walmart told the truth. So that's it, man.
Yeah. Yeah. No, that's that's real, man. Some of those things that they're negotiating in that tax bill, will also be interesting as you stated. The Medicaid work requirement is one of the pieces where um, there's going to be a work requirement for recipients. And they're discussing on moving that from start date of 2029 or 2027. Um, and then that SALT, that state and local tax, they want to increase that cap to 124,000 for joint filers, where it was originally proposed to be 30,000. Um, so that's going to be interesting. Um, and that's the deduction up to 124,000 for joint filers. So it is going to be interesting, and Yeah.
Yeah,
Yeah.
yeah, it's gonna be quite the battle. It's gonna be quite the battle. But that, like I said, that's what's front and center right now.
Yeah.
That's where the focus is. So we'll see how it goes.
Yeah. Yeah, Joy, there was a decent number that held up that original vote, but on Sunday they they changed their vote from no to present. Um, three, it was four Republicans. They changed the vote from no to present, which allowed the bill to pass. On the 16 to 17, 17 to 16 vote. So there are some that have concerns. Um, so we'll see how that goes. And talking about just the impact um, on the national debt, and increase the national debt by $3.3 trillion over the next decade. Um, so yeah, that's true too, Joy. That's true too. So we'll see. We'll see where this goes next. And and what the narrative is that people listen to, but also what that impact is on the economy overall. All right. So over to the charts. Well, any other questions? I'm sorry. Any other questions before we move forward? Yeah, middle incomers, folks making mid-level income, um, too rich for assistance, and that ultimately is going to continue to widen that gap, all right, between your rich and or your wealthy and your non-wealthy people, right? That income gap continue to widen. So the dollar pulling back, right? Article mentioned it, right? Been moving to the downside. We marked out this zone last week. Said we'll watch to see how price responds when it gets here. Do we break through that level and continue moving down? Or do we hold here and make another move to the upside? So been in that retracement phase. So as we come down to the 4 hour time frame, right? You see that a little bit more clearly here in that retracement phase, kind of range bound right now, holding up here. We have broken through the cloud to the downside. We are bearish ahead on the cloud. The lagging span has broken through price, hasn't broken through the cloud just yet. So moving back down, go back to we got a stochastic that's still coming out of that sell zone. Okay, so we're headed down, could see more downward movement. So we'll see how far down this goes if we break this zone and continue moving down to the matching extension at 95. Um, so that's what I'm watching to see where the dollar goes from here. Okay, we did get a 618 retracement here. Okay, so the matching extension on the 4 makes sense. Okay, just if we have the fundamentals that align with that for that movement. So watching that closely there. We come down to the 1 and similar to the 4, where we got that 618 retracement here, and then we're moving down. Okay, so we'll continue to watch the dollar and see how things move, along with all of the moving parts. Um, that is the current state. All right, so that's the DXY. Um, S&P 500, S&P 500. Um, I was looking at this just from multiple perspectives, just to see where things are. Right, on the month hasn't closed yet. We got another 11 days. Evening star pattern. Right, Benny touched on this last week. Evening star pattern, right? Which, if we close like this, similar to this, right, this is a clear signal of movement to the upside. Okay. And this is on the monthly time frame. So watching how the month closes, this is almost textbook if we close anywhere similar to this. All right. We got a stochastic moving down into the buy zone on the monthly time frame. Okay. Come down to the weekly. In the weekly, we're overbought. All right. So we got a mismatch here from a longer term time frames. Um, from a longer term time frames as we bounce back and forth here, right? So we're moving to the upside, in a strong way. We got a monthly resistance level here at 61.32. We'll see how the market responds once we get there. But moving to the upside, staying above the cloud. All right. As we get down to the daily on this, we hit a daily de-extension. Okay, so we're starting to stall out a bit here. We'll see how the market opens as it takes in the data and the member speaking this week. But we hit a daily extension. So do we get a swing high at some point, right, before getting to that 61.32 level, or do we just run straight to it? I think a lot of that depend on the talks around the tax bill, right, and how that moves. But we got a strong cloud break. How much further do we move to the upside before correction? Okay, so at some point we'll get a swing high and we'll get a new AB boundary to form on the daily. Down on the 4, we got a fresh AB boundary. You see our consolidation happening here. We got a 118 and 127 zone sitting at that 61.32 level. Okay, so my question in the back of my mind is, do we get an 80-20 out of this before that move to the downside? All right, that'd be beautiful for us to get and then have that opportunity to get short. Stochastic is pushing into the sell zone here, so more upward momentum potential on the 4-hour time frame. Okay, so like I said, we'll see how the market opens today. So as we get down to the 1, we zoom out here, right? I got fibs running off the low, and we're pushing above that B boundary, 118 and 127 zone, similar to that 4-hour time frame, sitting in that 61.32 area. Okay. So we'll watch for what happens next, right? Do we get the 80-20 here and then that move back down, or do we move down before we push into that 118, 127 zone? Okay. So that's what I'm looking at for the S&P 500. From a longer term perspective, looking bullish. But do we get a correction before we get that move to the upside off of that evening star pattern? Okay, so that's the S&P 500. Looking to see if we get an 80-20 here and then a correction. Questions? Is that what you're talking about, Reese? We're talking about this one on the 1 hour? Or DXY? Okay. Um, I can go back and take a look. But that's the S&P 500. DXY. There's a DXY on the 1. You got a fib running off the low. Is that what you got? Okay. So Reese is looking at it from this perspective. Hold on one second, everybody. So Reese looking at it from the fibs come on the move to the upside. We're at an 8-6 retracement right now. And do we stay inside the AB boundary? All right, that's Reese's question. As we continue to trickle to the downside here, where does price go on this DXY? Okay, so I'll keep those on there, Reese, and we'll watch from that perspective as well. Right? Do we stay inside that AB boundary or do we take it out? Right, and that's all happening in this zone here that we highlighted last week. Okay, so yeah, we'll see. We'll see what happens. We'll see how the market opens today and see what the sentiment is. All right. So that's the S&P for the US 30. We'll come back. Setting out a level of resistance right now. All right, we got a 618 retracement here, pushing to the upside, D extension just above this level at 43,677. Let's see what happens right here. All right, let's see what happens at this resistance level. You got a stochastic that's still elevated, right? Still overbought. um, so we'll watch the market and see what happens. Do we get a break at that level to get to the D extension, then a pullback to give us a crown, inverted crown pattern? We'll see that too. All right. If we break this level, get to the D extension, and then come back. All right, giving us that retracement before that move to the upside. So let's watch and see how things develop here overall as we continue to move. Here we also broke that cloud and we're bullish ahead also on the cloud. Okay. Come down to the 4. Take that back out. Similar to that daily. Okay. 618 retracement. We're headed long. How do we fare here in this area? And then on the 1, similar story, right? So all 3 levels, similar story. Do we get to the D extension before the retracement is the question there. Okay, so watching that level and to see where we go. So that's the US 30. I want to go and take a look at these Aussies with those with that cash rate being cut, right? So from a daily time frame perspective, we've been in this range for a little bit. We pushed up to this daily resistance level, 8-6 retracement, okay, and kind of stalling a bit, pushed down as of last night, this morning. Stochastic still elevated on the daily time frame, right? So now looking at, do we get a shift in the dollar to give I'm sorry, not the dollar, this is Aussie CAD. Do we get price to continue moving to the downside? We already have a swing high here, okay, and we're in consolidation. Are we able to break out and continue this move down? Okay. um Over to the 4, we pushed into that 118 127 zone, and we're still moving sideways. All right, so we'll shift this, we'll shift that out, and we'll see if we're able to continue moving down here and break the support level. Okay, so we got 80-20 on the 4, all right? Deep retracement on the daily. So are we able to break the support level and continue moving down, or do we stay range bound for a bit here on this Aussie CAD? All right, so watching this 80-20 here as it develops, ultimately looking for a move to the downside. Okay, so we'll keep that one on our radar. Down on the 1, whoops, changing here and I shouldn't be. My bad, guys, 1 second. Got into a habit. There we go. So down on the 1, right? Previous 80-20 didn't play out. Okay, so we got a fresh AB boundary here on the 1 hour. And this is that consolidation that we saw from a daily time frame perspective. Okay. So do we get that move to the downside in a retracement? All right, so tracking this one off the 4 for that 80-20 and that move down. Let me come back. 90100. Yes. This area right here, right?
Yeah.
Hold on, wait, we're talking about right here? Previous support here?
I was just saying when I zoomed out, it was a support and resistant area. So price been fighting
Oh
here.
yeah, I got you. Yep, yep. All in that zone there. All in that zone there. Got some equilibrium happening. Okay. Give me one second. Um, yeah, so that's definitely a zone for us to keep our eyes on. Definitely a zone for us to keep our eyes on, as the market is just bouncing back and forth, trying to figure out its direction. Okay. Um, that Aussie yen, we're moving down. Okay. From a Bank of Japan perspective, let's go look at this real quick. Um, Japanese yen strengthened past 144 per dollar on Tuesday, marking six consecutive session of gains as investors eagerly await developments in the upcoming U.S.-Japan trade negotiations. Third round of talks is anticipated to start no later than Friday in Washington, with Tokyo top trade negotiator Ryasi. I won't try to pronounce the last name. Akazawa, maybe. Set to lead Japanese delegation. Akazawa underscored Japan's firm stance on securing the removal of U.S. tariffs as a condition for any bilateral agreement. That's a strong stance. All right. Emphasizing that Tokyo will not yield to pressure uh, that compromises its national interests. So, back to his statement about good faith negotiations, right? Does he see this as not in good faith? Domestically, investors are closely monitoring Japan's forthcoming trade data, which may reflect earlier signs of strain from impending U.S. tariff measures, right? Externally, the yen's recent appreciation has been further supported by a weakening dollar amid Moody's downgrade, the U.S. sovereign credit rating, and critical vote in the U.S. over the president's trade tax cuts. Right. So this is going to be interesting here where that goes. Right. That's a strong stance, and do they stay there? So that's one piece definitely to continue to watch, um, as that could cause some tension. Um, I'll choose those words as we move forward in those trade negotiations. Okay. From a Bank of Japan perspective, um, you have a back and forth that's happening right now. Right. You had Japanese government bonds, um, long-term bonds. They reached record highs for your 30-year and 40-year yields. 30-year climbed to 3.14%, and the 40-year rose to 3.6%. Um, and this follows a weak 20-year bond auction, right? So they didn't get as many buyers. Investors are concerned over the Bank of Japan's tapering of bond purchases and Japan's fiscal outlook amid discussions of potential tax cuts ahead of a July upper house election. Okay. From a monetary perspective, the Obviously, they maintain their policy rate on May 1st. The economy contracted 0.7% in the first quarter, okay, due to a 2.3% drop in exports and stagnant consumer spending influenced by those tariffs, right? Which kind of leading some of the stands here. Then you have inflation. Inflation for Japan is around 2.2%. All right, and that's where they project to end the year 2025 around 2.2%, and they expect it to ease to 1.7% in 2026. All right, so that's the current projection, and so with that, um, Governor Wade is like, not in a rush, right? Not in a rush because we see inflation decreasing. So that brings in some challenges on them getting to that 2% target, and how do they do that, right? If they increase rates now, um, could that impact them longer term when it comes to reaching that? Um, so you have this back and forth on policy direction. You got the deputy governor expressing readiness to continue to hike rates if the economy rebounds from the external pressures, i.e., U.S. tariffs. Right, but then you have board members that advocate for a pause in the rate hikes due to uncertainty surrounding that same trade policy and potential impacts on the Japanese economy. Right, so you got a back and forth happening inside of the Bank of Japan in what direction they go. So in the short term, you've had some strengthening of the yen. We'll see if that continues, especially with aided by the weakness of the dollar. Okay. So as you come back to this Aussie yen, right, you see rate cuts for the Aussie, and you see that yen gaining some strength here, right? So we got a swing high on the daily 618 retracement, and we're moving down, right? And we expect this one because of the state of the Australian dollar, rate cuts. We expect this to continue to move to the downside, and we'll reassess once we get to that B boundary. But ultimately, looking for this to get to that $78 level and that matching D extension down here at some point. Okay. But moving down nonetheless right now on this Aussie yen. Coming to the 4 hour, we just missed that 118, 127 zone, but you see the retracement happening there. Okay. Um, and then as we come down to the similar story, just missed that 118, 127 zone, and we got retracement happening. Right. So look for a deep retracement level, and then ultimately for that to continue moving. I don't know that we see this bounce in the action, especially with the state of the Australian dollar at the moment, right? Unless they have something drastic happen and they have to make some strong moves. Okay. So moving down right now on this Aussie yen. My bad, everybody. Good morning. Moving down right now on that Aussie yen, really tracking this one off of a daily time frame here in that 618 retracement. Okay. Questions on the Aussie yen?
Nope.
Nope. All right. Cool beans. Aussie dollar, still range bound. Right? Daily time frame, we're caught here, didn't quite get to that 118 and 127 zone, previous daily resistance, right? So we're stuck right here in this range. Stochastic pushing back up out of that sell zone. We're still caught in this range. Okay. We come down to the 4 where we're tracking the 80-20, and you see it's just moving sideways. So we'll continue to be patient here and allow this one to continue to evolve. And so you have the dollar that's retracing, right? Coming back down to the downside, weakening. Um, and you have the Aussie who just cut rates, right? Um, so let's watch and see where we go here. Just continue to be patient and allow this one to play out as it will, right? But there's our 80-20 there on the 4 on that Aussie dollar. Okay. Down on the 1, bunch of back and forth, right? Ran fibs in both directions just to see what was there. But we got a 50% retracement there, bouncing back and forth here, right? So nothing really happening on the 1 hour time frame, right? We're tracking this one off the 4. So we'll continue to monitor that and see how things develop there. Aussie CAD on the 1 hour. We'll go back. Any questions on the Aussie dollar? No.
Nope.
Aussie CAD 1 hour. What you got here, Reese? What you got here, Reese? Where you running your fib from? May 15th low. You're looking for a reversal on this and a move to the upside. Let's see. See if it settles in there. All right. See if it settles in. It'll be interesting to see, right? From a higher time frame, we're at a deep retracement. So what direction does this go? One more push up before the drop. I gotcha. Let's see. Do we break that B boundary and push here to the D extension? I'm sorry, nope. Matching extension is here. So almost giving like a double top here. I dig it. Let's see if it settles in, right? Let's see if it settles in. We did break back below that cloud there, and we did get the twist here. So let's watch it and see what happens. Let's watch it and see what happens, right? We're saying, do we get another push to the upside? And then that reversal back down.
I've got a 4 hour 80-20 on the Aussie CAD.
Right here.
Yep.
Yep. We're pushed into that zone there, and now we're kind of range bound. And that's what I was saying. Are we able to break through this level here, get out of that range, and continue that move to the downside, or do we stay range bound for a bit? Yep. So let's see how price moves, right? Do we get a move back up, or do we continue to crash and break that level, and continue that move to the downside? I dig it. Let's watch and see. Aussie, New Zealand, daily time frame, we're back and forth, right? Which is typical for the Aussie, New Zealand, right? Bottom of the range, we're trying to make our way back to the top of the range. We'll see if that happens. But we broke this key level, got support there, came back, weren't able to break above, and we're turning back over, moving down. Stochastic in the sell zone there. We come down to the 4, right? And we got a 50% retracement here. Didn't quite get to that 618 level, right? And we turn back over and we're pressing down, right? So do we stay above the cloud here or do we break that cloud? If we run a fib off the low, right? Let's see this here. 1, 2. Technically, 80-20, right? That B boundary didn't form until this candle closed, right? So we're pushing back up into that 118, 127 zone, trying to turn over. We've already turned over, and we're moving back down. So we'll look for this one to continue moving to the downside. See this more clearly, right? There's the 80-20 there on the 4 on the Aussie New Zealand, moving down. Okay. Come down to the 1. See that a little more clearly there. Shallow retracement, 118, 127 zone, breakdown. All right, so we're already at a 50% retracement level. Could see this come back and retest the support level that it broke through there before continuing that move to the downside, like so. Okay. But that's where we are on the Aussie New Zealand. Possible death cross on the one. I dig it. All right. So I'm looking at more continued movement to the downside in that on that Aussie New Zealand. Any questions here? Nope. Okay. All right. So again, here, right, this one's already on the move. So we could get a pullback and a move to the downside. Let's look here real quick. Yeah, that's just a fresh AB boundary on the 30. Same thing on the 15, right? So if you're trading these lower time frames, looking for a high price to get back short, right? A high price to get back short. So price coming back into the 618 retracement area, and then look for an opportunity to sell. Okay. So that's the Aussie New Zealand. Let's take a look at this Euro Aussie. We were talking about this one and where it would go, and price stayed inside that AB boundary on the daily time frame after that push to the downside, and we're getting this reversal now, right? It didn't get down to that daily support level, and we got a shift, right? We got cutting of rates for that Aussie, and you see price turning over and starting to try to make its way to the upside, right? In the background, you got a lot of market participants talking about um, potential in the Eurozone. So we definitely could see continued strength coming out of the euro, coming out of Europe, and so we could see this euro dollar continue to pick up steam. So this one is a beautiful setup for move to the upside. Got daily support there, right? And we're looking for that move to turn over and continue moving long. All right. So as we come down, take this down. As we come down to the 4, he was that 80-20, right? That push to the downside, took out, we had fibs running to the upside there. Those got taken out. So we flipped it, pushed down into the 118, 127 zone, and there's our reversal, right? So this is moving beautifully as expected, okay? And we could see this continue. This could be the start of this A getting taken out ultimately and continuing to move to the upside off of that daily time frame. Okay, so Euro Aussie long 80-20 on the 4, deep retracement on the daily. Okay. Questions here? Oh, all right. We come down to the 1, and we're just tracking those ABCD waves. We also had an 80-20 here. Shallow retracement, 118, 127 zone. There's your reversal. You got a nice 618 retracement here on the subfib to the upside. 17391. Great work, Reefs. 391. Right in that area, right? And that's what I was getting at. Drop some sevens in the chat for Reese. Great work on that entry, right? Push into that 118, 127 zone. We got a reversal here, right? And Benny was talking about watching those trend line breaks and pullbacks, right? And so if you run the trend line off the high, right? Boom. Trend line break, pullback. Came right back to that 618 retracement zone. Got you a double bottom here. And now you're moving to the upside. Joy 17397. Great work, Joy. All right, recent Joy killing. Beautiful. Sevens for Joy also. I love it. I love it, right? And so now we're looking at this. We'll just track those ABCD waves to the upside now, right? ABCD waves to the upside, okay? But being patient and allowing your rules to be met, right? If you're waiting for that trend line breaking a pullback, wait on the trend line breaking the pullback, regardless of where it comes, right? Yeah, people will think, oh, the trade got away from you. No, it didn't. It's going to come back, right? Came back right into your sweet spot, met your rules, and now you got an entry to the upside. And you can play this off of multiple levels, right? This could be the start of that daily move, right? Start of that daily move. Those entries off of that retracement here, right? This is around that entry point for Joy and Reese. Now you're looking at price moving to the upside, moving to that 118 level. It's 1,032 pips to the upside, right? We do. We do, man. Um, it's a beautiful system. And it gives you clear rules, right? With a consistent process that allows you to track your results and make adjustments where you need to. And those adjustments are sheerly from a mental perspective, right? Right? All managing your emotions and your thoughts and trusting the process. That's the Euro Aussie. Move to the upside. ChatGPT is definitely the sidekick for sure. Any questions on anything that we covered this morning? Benny, anything before we wrap it up, bro? It is, Reese.
No, no, man, great session. Other than that, just we got to get a chance following that Tesla 80/20 that we called a while ago. It hit targets on Tesla. But that's it, man. Just continuing to track the 80/20s right now.
Yes, sir. Let's continue that 80/20 hunt. All right. All right, good people. I'll pull this chart up, but you all have a phenomenal, phenomenal day. And we'll be back at it tomorrow, 6:30 a.m. Eastern Standard Time for this pre-New York session. Peace. Google, what's that? Agreed. Agreed. See you guys tomorrow.